game-changing discussions on the big ideas that shape our thinking. This is One-to-One.
Hello and welcome to One-to-One. Ike Chioke is Group Managing Director of Afrinvest West Africa Limited. He's a first-class civil engineering graduate of Obafemi Awolowo University. He attended Oxford University as a Rhodes Scholar, where he earned an MPhil degree in management studies. He has over 3 decades of investment banking experience and worked in some of the world's most prestigious financial institutions in London and New York, including Goldman Sachs, Solomon Smith Barney, and Citigroup. He's also my guest on the show today. Ike Chioke, welcome.
Good to be here, Tokumba. Thank you.
Good to have you. Incredibly pleased to have you. One of the really fascinating aspects of your profile, of course, is that you are a Rhodes Scholar, educated at Oxford, MPhil in management studies. Talking about your investment banking career, you've obviously had a thriving career in investment banking in some of the world's most prestigious financial institutions, Goldman Sachs, Solomon Smith Barney, and the Citigroup. I'm interested, so having had such an extensive and thriving career, we haven't even mentioned the fact that you had a first class in engineering at Obafemi Awolowo University. What influenced your decision to return to Nigeria when you did? What was it?
That's an interesting question. I joined Goldman Sachs in 91 in December. And let's put aside for a moment how I got to New York after Oxford. But then I joined in what they call the off-cycle year, because typically Goldman Sachs would make hiring decisions in September, November for people starting the following July, August. But I joined in December, totally after the training program for the class of 91 had been completed. So I rolled over into the class of 92 eventually. I spent 91 to 97 at Goldman, at which point I got very familiar with working on all sorts of, investment banking transactions for blue chip American companies. You name it: Ford, AT&T, Sprint, MCI, WorldCom. Of course, on the entertainment side, MGM, Warner Brothers, Sony Pictures even came in there, Disney, the publishing side, New York Times, Washington Post. So quite a lot of companies where the average transaction you're doing is, $1 billion is a small deal, 5 billion, 25 billion, it begins to look, medium-sized. And then the odd 100 or 200 billion dollar host or takeover. Then about 95, 96, I began to realize that ultimately I intend to go back to Nigeria. Yes, I had the opportunity of being in America, had a green card. But when I extrapolated my future to see now an associate, you want to look and see 5 years, 10 years ahead of you, the lifestyle of the vice president or the managing director that you aspire to become. And I thought to myself, well, it's interesting, but money doesn't really motivate me that much, even though I work in an investment bank, and that's somewhat a paradox. But I said I wanted to learn investment banking, and I think I needed to step out of Goldman Sachs and learn how to do advisory for smaller companies. That was when I decided to look at Smith Barney. Because Goldman Sachs had a big franchise in the West Coast of America in San Francisco. I specifically wanted to transfer, this was the mid-90s, 94, 95, to San Francisco to deal with the startup companies, which were, if you remember, AOL, the likes of Google had not even appeared, Microsoft, those kind of emerging tech companies. The original first tech boom was coming out there. And to understand how to finance and structure for those companies, because they bore more relevance to the kind of companies Nigeria had. Of course, we had a lot of old established government companies, but many of Nigeria's companies are in the smaller scale size. Afrinvest had been started by my friend Philip Ihanacho. Philip and I had met in 93, 94 in New York when he was working for McKinsey. And he then left McKinsey several years later and set up Afrinvest. And I joined him in London in 2002 because I brought in investment banking expertise. Afrinvest at the time in London was just doing trading, closing trades between Nigeria and between emerging market investors based in London who wanted to trade Africa. So Afrinvest London had trading relationships across 10 sub-Saharan African countries. So the likes of in South Africa, they had a broker, in Cote d'Ivoire, in Dakar, in Egypt, in Kenya, and of course, Nigeria was the biggest place aside from South Africa. So that was how that relationship started. Started running Afrinvest London for a while, and then ultimately decided to move to Nigeria to set up the Afrinvest franchise in Nigeria. So that's how I came back. Interestingly, before I moved back, I met my wife, Yvonne. She's a Dutch national, and I met her on a deal in Kenya working for Salman Brothers. And it was her that then found a transaction that brought me to Nigeria. It was actually, she was the one that was mandated by a Nigerian group called Investors International London Limited, headed by Chief Bode Akindele of blessed memory. Bode Akindele was a very wealthy Nigerian, and he wanted to take over Nitel. In that process, I got involved in the transaction and got much more exposed to the Nigerian investment banking opportunity, and then used the chances that came to move ourselves back to Abuja in 2003. And 2004, established Afrinvest Nigeria. Guess what? In the garage of my house in Abuja, in Maitama.
As you do.
Yes. And then that's how we started, very humbly. And today we've become one of among the top investment banking franchises with 7 operating businesses and over nearly 200 professional staff across 5 offices.
Absolutely. And in my mind, that births 2 questions immediately. So the first thing I'll ask is, having returned to set up Afrinvest, albeit in your garage, what impact would you say that you were able to make? Say, I won't ask you that question over the entire expanse of the period you've been here, say in the first 5 years.
I think that it'll be fair to say that Afrinvest raised and continues to raise the bar in terms of the quality and professionalism of investment banking practice in Nigeria. And let me give you an example of several innovative transactions we pioneered. At the time in 2000, started the firm in 2004. We were very busy with the banking consolidation at that time. No sooner had the ink dried on my incorporation paper than the then central bank governor, Chukwuma Soludo, who's now governor of Anambra State, announced the banking consolidation and said all banks must raise their capital from a minimum of 2 billion naira to 25 billion. And suddenly, there was a slew of investment banking transactions available for Afrinvest, so both in capital raising and mergers and acquisition and spin-offs and restructurings and all of that. And so we pushed the envelope. We were the first to close the first consolidation transaction there, which was UBA's reverse takeover, or rather the reverse takeover of UBA by Standard Trust Bank. Standard Trust Bank was, headed by Tony Lumelu. And then his smaller bank effectively took over the behemoth of UBA. And he took over control of UBA and effectively repositioned UBA to the giant of Africa it has become. That's 2005. 2007, more banks were now raising more capital. We advised GT Bank and said, look, you have enough Naira, but the issue is that Nigerian companies are looking for foreign exchange to grow because, if you look at the telecommunications sector or the oil and gas sector or parts of the aviation management sector, you see there are many companies that earn dollars in revenue and they need dollars to be able to fund their growth. Many banks can only offer them Naira. Then they have to go wait at the CBN window for dollars. But if you actually have a dollar balance sheet, you will be ahead of the game in being able to lend them dollars. So we pioneered the first Eurobond transaction by any Nigerian, in fact, indeed, any sub-Saharan African bank. In 2007, we took Bank to the London Stock Exchange and raised $350 million for Bank. It's on record. And that's Afrinvest, a Nigerian advisory firm, putting its name on a prospectus on the London Stock Exchange alongside Morgan Stanley and Goldman Sachs. The next year, went even further. We got GTB listed, listed on the London Stock Exchange by launching the GTB's Global Depository Receipts, GDR transaction. It started out at a $750 million deal, but because we also selling to Nigerians and internationals simultaneously, the pot was allocated $250 million for Nigerian investors, $500 million for international investors, being run by two joint book runners overseas. I believe it was Morgan Stanley, and I think it wasn't maybe Goldman Sachs again in the second deal. But our pot got increased. We had to upsize to $325 million because of the fierce demand in Nigeria.
That's Nigerian end.
Yes. And then eventually closed the deal at $825 million. So between 2007 and 2008, Bank had raised over $1 billion because of Afrinvest. And that completely transformed GTB and pushed it ahead of the pack. And it still has maintained that position up to today. So talk about impact. And that's just from the advisory side. You also have to think of impact from people. Through Afrinvest, the doors of Afrinvest are open to young men and women who have come and learned and understood about investment banking, investment research, asset management, brokerage, trading, fixed income, trading equities, doing mergers and acquisitions, doing capital raisings, and understanding, yes, this is what the Nigerian regulatory environment provides, from the SEC or the Nigerian exchange. Well, these are the international standards, and you must marry your work to meet the international standards at all times. And I think that was captured succinctly by one advertisement we launched, global experience, local application. And that's how we sort of coined Afrinvest sometime in 2009. And that continues up until today.
That's marketing genius, by the way.
Thank you.
Amazing. So in running through this, you've talked about Bank, many of the players.
UBA. Even First Bank, we raised money for First Bank.
Yes.
During that era.
Absolutely. So let's talk, therefore, about that climate that you birthed.
Banking sector,
recapitalization.
Yeah.
Which is essentially what you've just been talking about. And I'd like to hear from you. I mean, you've spoken extensively about how you helped facilitate it. As a forerunner in that field. Of course, you've built strong banks, presumably able to support the industry, micro, small, medium enterprise organizations. That would hopefully be the backbone of the economy. What impacts do you feel that recapitalization process had on society, the economy, and also more specifically the ability to lend to small businesses in order to grow the economy?
Well, if you think back to 2004, 2005 recapitalization, there have been two more industry changes in the banking sector. So like I said, the 2004 to 2005 was moving the capital base of Nigerian banks from 2 billion naira to 25 billion. If I recall, at that time, there were 89 commercial banks, which cumulatively had about 332 billion naira of capital. $2.4 billion, if math is right, with the exchange rate of the time. When the dust settled, we had now only 25 commercial banks. And the total capital base had gone to about over 900 billion naira. At that time, about $7.2, $7.3 billion, because the exchange rate then was about 125 or so. Then 2010, SLS, Sanusi Lamido Sanusi was now central bank governor. He then realized there were some excesses he had observed in the banking sector following the consolidation, and that we needed to remove or stop what we know was known as universal banking. Universal banking essentially meant that you had this big bank at the top, which owned all sorts of subsidiaries, from insurance to pensions to asset manager to investment banking to brokerage. And sometimes there were transactions that were not quite transparent happening underneath the subsidiaries, with the big bank that had capital funneling all of them. And Sanusi's reform indicated that any bank that chose to have subsidiaries must recreate itself as a holding company. So you had a holdco, that was a non-operating holdco, and the bank itself was a subsidiary, ring-fenced from non-banking businesses. You couldn't take, depositors' funds and go and fund a venture capital business in, real estate or something like that.
A bit like Glass-Steagall.
Yes, a bit like Glass-Steagall. So that was our reform. And if you didn't want to do a holdco, you could become a pure play bank and spin off all the non-banking assets. So again, we love those reforms because they introduce M&A transactions or capital raising transactions. And Afrinvest was very busy finding our merry ways in 2010 to 2012, reorganizing quite a few banks. But the current recapitalization, headed by the new CBN governor, Cardozo, is now coming on the back of you can see the excesses of the central bank itself following the last regime. And then the president had to take very bold actions upon it being inaugurated, President Bola Ahmed Tinubu. And that cost, together with the CBN's actions, obviously cost a massive devaluation. And if you recall, I said that the value in real terms of the capital of Nigerian banks at the end of 2005 was about $7.4 billion. At the end of 2023, that value had crashed to $1.5 billion. You can see that meant that if the president had the ambition of pushing Nigeria to becoming a $1 trillion economy, he certainly didn't have the capacity when your whole banking industry is only $1.5 billion. So the current recapitalization has different tiers, levels for international banking, licenses, those that have domestic, banking licenses, for merchant banks, for regional banks, for non-interest banking. But cumulatively, the ask is that they will raise about $4.4 billion of additional capital and put themselves closer to $6 billion by the time it's done. The deadline for that is March, April to 2026.
That's roughly about 6 trillion now.
Yeah. But if you think about the impact, all this money coming and going through the banking sector, it has changed a lot. The Nigerian banking sector is actually one of the most sophisticated. From as a bank user, I have a bank account in the US, I have a bank account in the UK, and I operate obviously bank accounts in Nigeria. And I have to say that the Nigerian banking technology is superior in terms from a user point of view, because you have this idea of instant record of any debit or credit into your account. If you make a payment, you can immediately send an evidence of payment to people. It's not like that overseas, you know that. And so there's quite a bit of capital that has gone into technology and in the Nigerian banking sector. And you can see that from even the number of
fintechs.
Yeah, the number of fintechs. So back then, there was nothing like fintechs. Today, there are about 200 active fintechs that are providing all sorts of services in the banking sector. In terms of deposits, I think it was something like 1.5 trillion naira then. We're over 28 trillion in deposits today and counting. In terms of banking penetration, it's probably more than 68 million BVN, bank verification numbers. So that shows you the total number of individuals that have accounts, regardless of whether you have 10, you only have 1 BVN. Yeah, so there's clearly more penetration, and as a result, there's more money available for loans. But has Nigeria succeeded in getting money to medium and small size enterprises? I have to say no. and not as much. And there's some of the systems that can help are coming into place just now, like the NIN number, the BVN number, the credit scoring, numbers, because you need quite a lot of that to be able to freely just give credit to somebody that doesn't have enough formal information to give you, like annual reports that are audited, 3 years history for that, or credit rating report. So much of the money that's coming to the banking sector has really gone back to the formal side. And today,
Huge informal sector, Michael.
over 92% of Nigeria's economy is informal, but less than 6% of credit goes to the informal sector. So we need to do some more work in that area for sure.
Right. So, Ike, that's very illuminating about recapitalization and the actual amount of impact that this is making in terms of lending to micro and small medium enterprise organizations. I think we agree that that impact has not been huge, but of course, a number of issues. They're dealing with a largely informal sector. But how about development finance? I mean, there's quite a lot of opportunity, certainly from the International Finance Corporation, the Africa Development Bank,
Correct.
for example. And quite a lot of money has flowed in from development finance type funds. Do you feel really that our economy, our companies, Nigeria, is mining the optimum benefit from that source of financing? And if not, why do you think that was, sir?
DFI funds have helped for sure, have helped to catalyze the growth of the banking sector, the Nigerian economy. You mentioned African Development Bank. In last year alone, they had probably about $4.4 billion of investments in Nigeria compared to something like $29 billion across Africa.
Okay.
Yeah. So Nigeria does get a significant share, about 15%. The other big markets would be like Egypt and South Africa. If you think about the IFC, I think we're about 1.1 or something billion dollars on a total capital pool of about 14 billion. So the same kind of ratio. World Bank also has monies they put into the country over the years.
About 20 billion.
Yes.
Thereabouts.
But when you think about it, a lot of that money still goes to the formal sector. Yeah, it's unfortunate because the IFCs of the world, the AFCs, Africa Finance Corporation, was a homegrown version. I even forget to mention Afrinvest, which is based in Cairo, brought quite a lot of cash into Nigeria. They still demand and require formal organizations. So what we've seen that has helped is that people like Bank of Industry have come in and captured some of those and been able to take dollars and unlend in Naira have been extremely beneficial to the system. And they've also been able to try and get to smaller companies, although they themselves require a guarantee to take money. So that guarantee, unfortunately, the MSMEs cannot give you that kind of guarantee.
They have processes, governance system in place.
Exactly. But the translation effect of DFI funds, there's definitely a significant pool that has come into Nigeria. But the impact would have been better if we had solved some of the, what I call the value chain problems. If we fix things like power and roads and the ports and, transport infrastructure, those actually are far more beneficial to the informal sector than lending them money. Yeah, because the biggest challenge for doing business in Nigeria is that you bring your own infrastructure. So clearly, if Shell wants to set up their offshore drill, and you have to bring their own infrastructure, you're dealing hundreds of billions of dollars. They can certainly put the power plant in place and get water supply and everything else they need. But if a small tailor, a small guy wants to set up a tailoring shop because he's a good fashion designer, remember, after paying rent, landlords want 1 or 2 years upfront, and pays for power, and pays for security, and pays also the government agencies that are coming to shake him down. it actually becomes very, very difficult. So if power was stable and at an affordable level, transport infrastructure was fine, logistics was easier, then it can actually energize. Yeah. And so where I think that the DFI fund hasn't helped a lot is perhaps that translation effect into infrastructure in terms of cleaning up our power sector and building the road infrastructure in the right places. A lot of roads being built sometimes, places where people don't live. I won't go into the politics of the roads. And then, communications. Well, though we've done very well in communications, the telecom sector has also enabled finance and also enabled a lot of businesses. You can see a lot of startups, that are only dealing with customers through social media. Essentially, they sell directly through social media.
But those are massive projects, huge infrastructural projects. You're talking about power. You're talking about why aren't the DFI funds fine? Because you've described the trickle-down effect. If we can solve that, it eventually trickle down to the small businesses. And you're absolutely right.
Yeah.
Why aren't the DFI funds getting through to those?
No, but it's the structure of the organization. If you're going to lend money, you have to find a way to make sure it's going to come back. So I put in my risk factors and my gating arrangements. By the time I put those things, sadly, it probably can only go to state governments, who have, good projects. It can go to some sort of infrastructure projects. It can go to mostly, essentially, the formal sector. But bear in mind that Nigeria's population continues to grow at 3+% per annum. And so what looked like a lot of money in 2000, at the turn of the century, 2004, is no longer that material because the population has added enough, 20 or 30 or 40 million people. And so you just have more mouths to feed. And other issues like politics, leadership, insecurity have also taken a toll on the economy. And, mismanagement as well has led the country to take, significant economic shocks. The devaluation of 2023, it's going to take quite a while for everyone to digest that. You see your currency depreciate from 400 to 1600 in a matter of months. That's not easy. Prior to that, the currency depreciation over a decade was 125 to 400. You see, that was much more managed. Now, I'm not saying going from 125 to 400 in a decade is a good thing. Actually, it's wrong because, there's, based on your level of inflation and your relative exchange rate with other major currencies, you would have argued for a more gradual, more predictable depreciation. I won't call it devaluation. But when you don't depreciate and suddenly have to do a massive shock to correct yourself, then it can, scatter a lot of very good businesses.
Sends shockwaves
Yeah.
throughout the economy.
Indeed.
Absolutely. So I asked that question deliberately because I think that what the World Bank is saying is that we will need in this country, in order to bridge that infrastructure gap, about $100 billion US each year.
3 years.
For
Okay.
30 years.
Yeah, so if 100 billion, so it's something like $3 trillion. That's a lot.
Over 30 years. Yeah, 100 billion each year.
Each year.
For that period.
And think about it, we're doing 54 trillion naira budget for 2025. We're not anywhere close.
Yes, that's right.
And that's just infrastructure. Right?
Yes.
So the ideal will be how government enables the private sector to do more.
So thinking about this infrastructure gap, you're also talking about huge projects, long-term projects. And I'd like to stay on the subject of the source of financing. We've talked already about recapitalization of commercial banks. We've gone to development finance. How about other sources of financing? The sovereign wealth fund, for example, pension. Can we raid the Piggy-Bank?
Yeah, the pension fund always looks attractive. Today we have over 23 trillion naira saved up, by I think just about 12 million contributors in the retirement savings scheme. But 12 trillion naira is a lot of cash when you look at it. But when you boil down and look at the detail, over 60% of that has been invested in government bonds. So it's like we've saved money and then we've loaned it back to the federal government of Nigeria. So they're holding about 14 trillion naira of our money. And and the rest are allocated maybe equity market, maybe 10%, and some mutual funds. But going down to infrastructure directly, probably 1.5%, so just under 400 billion naira today. So that's not a whole lot. Much of it has gone into the Sukuk bonds, which have been used to build the roads, some roads across the country. Unfortunately, while I like the Sukuk bond structure, I don't like that they don't take a road and finish it from end to end. Often in a 100-kilometer stretch, there might be a Sukuk bond for 30 kilometers of it. So you're driving on this road, it's broken all over, you get on a piece of it, it's like beautiful. And then you drive for 30 kilometers, the money is finished.
Is that
and
why?
then the portion that they allocated for that road has finished. And then you go back to this, bumpy road for the rest of your journey. But, you talked about a sovereign investment authority, NSIA. They too have the Nigerian Infrastructure Fund, NIF, part of their portfolio. It has over 1 trillion naira. So they actually have more money set aside for infrastructure than the pension industry. And I think we can do more. The challenge with the way pension funds have come in is that that actually was part of a retreat of the PENOPS, Association of Pension Fund Operators, recently. Some of the issues there are that you've got this pension money. You're living in an environment with high inflation. Today, inflation is mid-20s, was down from above 30% last year. Now, and yet you're taking the money and buying government bonds that are paying you 20%. So the majority of the money has gone into an investment that is actually yielding below infrastructure.
Counterintuitive.
Yes. So if I'm contributing at age 30, by the time I'm 60, that money is worthless. So yet, can the pension industry have the courage or have the structure to invest in areas of the economy that are growing? And in the same country, you've got a flutter wave emerge and get to become a unicorn. That is a company that's become $1 billion valuation. You've got people like MoneyPoint, $1 billion valuation. And if you think there are no opportunities, you see the telecom sector, there are many companies that have gone from zero to hero in a matter of 4, 5, under 10 years.
Same economy.
In the same economy. And the PFAs are somewhat risk averse because the rules say, you must have rating, you must have this, you must have audited accounts, you must have profit, without allowing them a bit of space to actually take part of the equity component of these companies as they arise. And that's, somewhat, again, the paradox of Nigeria. You see how we have oil underground, and we're struggling to refine it above ground, right? And so, mercifully, Dangote has come to the rescue. But for generations, we all had problems getting petrol around the country. And when you think about the pension industry, our defined contribution system has created a pool of capital that's available. But the same capital is running away from the opportunity to invest in the real sector, the roads, the transport infrastructure, the logistics, the agriculture. Those are places that spur the economy to grow. And so you need just more creative minds to work together, government and the private sector, to actually find how to make this system work, rather than have all the cash on one side, and on the other hand, there's no money going to the right investments.
So Ike, that's really interesting. So what I'd like you to do is just walk through it for me, okay? I think what I'm sensing here is a huge desire to raid the Piggy-Bank, right? I'd like to know, if you were in charge of this, precisely how would you go about raiding that Piggy-Bank?
It's a question of the limits, your allocation limits. I think there's a structural issue in the way the pension industry is organized, where each pension fund operator, a PFA, is running its own investment advisory unit, rather than relying on experts. You understand? And so if Afrinvest were to send a proposal to say, this is how you can better manage your funds under management, they are not allowed to take that proposal and pay an advisory fee for good advice. Rather, they are forced to go in-house and develop that expertise. Given how difficult it is to build expertise in some of these complex areas, and you charge that to every PFA, it's going to take a long time to learn, and the goalpost continues to shift. So there can be some reorganization in terms of how the PFAs themselves are organized, and that has to come from the leadership at the, at PENCOM, the Pension Commission. On the other hand, there's also the issue of the allocations they have for different investments. Now they have sort of 70% allocation to FGN bonds. I dare say they should move that allocation to 40%. If you force them to move to 40% on federal government of Nigeria securities, then they have suddenly excess cash. You're talking easily 4 or 5 trillion that they have to figure out somewhere what to put in. Today, the allocation to state government bonds is only, what they've spent is only 10%, 2.5 trillion. Even the process of enabling a state government to tap onto pension funds is quite restricted. There are obviously issues that the state must be pension compliant. That means all their civil servants must be contributing to the system before they can come and raise money. But they can also come and raise money in a listed instrument that's registered with the SEC that allows the PFS to buy that. And I think that the allocation for municipal bonds should increase because development is happening at the level of the citizens, which the states are much closer to. And when you can do that for the states, you can actually do that for local governments, big local governments. A TIOSA local government is strong enough in a Lagos state to be able to issue a bond and build an extra bridge between Victoria Island and Ikoyi or the mainland. So like when I worked in New York, sometimes it's just a municipal bond. City of New York is issuing. And I do a $50 billion bond, just in a blink of an eye, it's done. So we need to sort of think about this money is not just meant to be looked at. This money is not just meant to collect interest for some people. This money is to be used to work the economy and grow it and expand the opportunity for our kids. Because, with a population base of, 65, 70% under 30,
and galloping inflation.
Yes, we need to create opportunity for them. Because otherwise, we continue to have all these issues of insecurity, people walking across Nigeria through the Sahara Desert to get to Europe, all sorts of, social vices that we're dealing with, So,
yes.
Yeah.
And these vices obviously come out of
frustration.
And the poor nation.
And the lack of opportunity.
Lack of opportunities.
Yeah. But if you're investing in the infrastructure of the economy, you're creating opportunities everywhere, opening up the countryside, securing citizens' and lives and livelihoods, and investing in agriculture. Then you wouldn't have this lopsided situation. There's a bountiful harvest in Kogi or Benue State, and then there's nothing on the south, that sort of thing.
Absolutely. Yeah. So, of course, what we agree is that, infrastructure is a huge part of this nation building. We've been talking about how we fund, the infrastructure. But, just going back, there's been a huge push in this country going back decades, thinking about how we reinvigorate, rehabilitate the dilapidated infrastructure. One of the things that was done, there was a massive wave of privatization. And then, of course, we had public-private partnerships. Can you talk to me about how well you feel we've done in this area? What sort of impact has
the PPPs on one hand, and then you have privatizations on the other. They all sort of seem to be pointing in the same direction. But there's this agency, the Infrastructure Concession and Regulatory Commission, ICRC, that manages PPPs, public-private partnerships, and then actually focusing on infrastructure. And then the privatizations have been organized through the Bureau of Public Enterprises. We did a majority of privatizations during Obasanjo's era as president. Quite over 140 companies were privatized.
Across various sectors?
Across various sectors. Yeah. The result is sort of mixed, I'll probably use say the good, the bad, and the ugly. There are some very good examples of privatized entities. Even the UBA we know today was privatized. Once upon a time, it was owned by the government. I think Hakeem Bello Osage was a successful entrepreneur that bought it before selling to Tony Elumelu. But the privatizations done by President Jonathan, which was mostly the power sector, yeah, that was a problem.
That was tough.
Yeah, because people then thought it was like getting a telecoms license, or back in the days when they issued GSM licenses and the likes of MTN, Airtel, Glo emerged. So every Tom, Dick, and Harry and their grandmother came to get a disco license. And these are people that didn't even understand the basis of financial structuring. And some of them went and borrowed money from Nigerian banks in Naira, in dollars, to buy assets that are giving Naira income.
And still did not invest in infrastructure.
And even have enough money to reinvest in the assets. You buy distribution companies. There were 12 distribution companies. They shut in for discos across the country. And they're not very good examples of many which have had the investment dollars come into it. Quite a few have had to be, taken over, So the example of some of those latter-day privatizations have not worked. I do think that the mistake could have been that we should have done more effort in pre-screening who qualifies and who doesn't. But unfortunately, some of these decisions get politicized. And therefore, people then say, oh no, I must allow this guy to come in. And then obviously, problems emerge. But, looking beyond, like I said, I can see that the government has new and increased plans on how to tackle specific sectors. MOFI, Ministry of Finance Incorporated, I don't know if you saw that, recently launched the MOFI Real Estate Investment Fund. It's a 1 trillion naira fund. The first tranche of 250 billion naira has been raised. And essentially, there's cash available to give Nigerians mortgages at single-digit interest rates to buy affordable homes. So that structure is in place, and that is something that will be coming out in the next few weeks. The president will probably soon do a big launch around it. MOFI has another sort of similar fund that is going to be looking at agriculture and other sectors of the economy in a way that you structure the funding, and the funding is available. Now you just have to then marry that with the opportunity that is on the ground, and in a way that there's returnable capital for the fund providers, as well as impact and transformation on the ground. Yeah. And we could do more of that. We have, for example, the highway HDMI. Is a shortened form. It sounds like the cable you use in one of your...
That is an HDMI, yeah.
Yes. But essentially, we've packaged about 10 major highways and sold them on to, handed them on to private sector investors who are now going to run those roads and toll them. Because no point having a highway that is broken, a distance that should have taken 45 minutes, 1 hour, you're trying to do it in 3 to 4 hours. Because there are many problems on the highway. And there are investors who can bring the funds, fix the roads, and, and so long as government is there to protect their interest, they can then toll it. Yeah. Unfortunately, the challenge is that, again, we set bad precedents. There was a tolled road in Lagos, if you remember, Ozumba Mbadiwe. Yes. Beautiful road. First toll was built. Second toll had been constructed, and there's supposed to be a third toll. And that would have been a beautiful 6-lane highway all the way to Ajah. And at a point, it became political. And the government of the day decided to take the road back. Unfortunately, the quality of the road is no longer as it could have been, or as it used to be. So I have to say that the political leaders must have the discipline to stick to contracts and agreements. If you've signed on to something, you certainly can find it within your capacity to make sure, so long as it's the right thing to do, to stick to it. Because after a while, you then realize that it makes more sense to do more and replicate that model. And that's how we connect the system and hopefully begin to look like a mini China, which is where we should be going to in terms of infrastructure.
Yeah. I mean, the principle of tolling roads is not novel at all. I mean, remember the M6 to Birmingham was tolled for several years.
Yeah,
you know, but I'd like us to talk about examples. We've talked about the fact that, of course, yes, the infrastructure is the issue. We need to bridge that gap. It requires funding. Okay, we've talked about a number of different sources. We've discussed the reasons why. I mean, in some of these cases, the money's not getting through. But there are gold standard examples, different parts of the world. Do you want to talk to me a little bit about that? Specifically about PPP and privatization, where it's worked.
Well, countries that worked, India is a good example, Mexico, South Africa. Even.
What have they done differently in Mexico, for example?
I think basically understanding the levels of protection the private sector needs. So I want to attract funding, and the private sector is not just looking at jokes and say across, oh no, I know you, I just want to protect you. But the contacts you have in England, for example, could enable you to bring £500 million to invest in infrastructure. And so you represent a whole body of potential investors. And I think that often leadership tends to be somewhat myopic because they look at the investor just from the lens of, oh, this guy's from this state and this guy's from this religion. And a lot of effort is made, oh, let's go and campaign and talk to foreign investors. But foreign investors actually have access to information. Information moves at the speed of light today. So they're listening to what you're doing to their local investors and how you're maltreating them. The minute we set certain standards of equity and fairness in the deals that we were structuring locally and making sure that we don't create bad and obnoxious precedents of maybe taking somebody's business away from them, no matter how they came about it, we can get back closer, the situation, for example, what the Indians did in terms of the kind of funding, they put together. It's also interesting, to make sure that you have this protection fund. Okay, we are going to give you this road. You can toll it only so much, but we know that the monies may not be enough. Government will then top you up to make sure you get an economic number so that your return is at the level it should be. And the funding for that top-up should be done in an independent manner. So the guy is not looking for the money or coming to any ministry to wait for his cash to come in. So therefore, the system continues to move. Otherwise, once the system shuts down, and then you've lost faith, you've lost confidence, it's difficult to restart.
And that is the key, isn't it?
Indeed.
We're getting the right environment domestically, so we send the right signals.
We have enough precedents. We actually have, and I wouldn't be advocating for a fact-finding mission of some Senate committee to go to any country. There's enough evidence of what to do right in Nigeria. We can just sit down and if you need to do more, Google it or use ChatGPT to even recreate what it should be in Nigeria, and AI will spit out the structure you need.
There you go. Absolutely.
Go.
I'd like to return to a very important point you made earlier.
Okay.
You met your good wife along this journey,
yes.
right in the middle of structuring a deal.
Yes,
actually and
yeah.
You returned together. I love the way it's brought a smile to your face.
Okay.
You came back to Abuja together and started, got
Okay.
on with them. How important? Of course, I appear to be asking a very obvious question. But really, you speak of her in the sense in which you'd speak of a partner on this journey. Do you want to talk to me a little bit about that? Okay,
so at the time, this was 2000, at the turn of the century, and we are worried that earlier that year with Y2K, that computers are going to crash, planes are going to fall out of the sky because 1999, the clocks were set to stop at 1999. Nobody knew what's going to come after that. Anyway, so in 2000, I was advising. I was working at Salomon Smith Barney in London, and we had a mandate. It was an IFC-supported mandate to advise the government of Kenya on the privatization of Telkom Kenya. And we had then organized what they call a beauty contest, created an RFP. First of all, it was what they call an expression of interest. If you're interested, you want to buy this company, express your interest. Then we shortlisted a few people, then invited those ones to do a more comprehensive submission in the RFP process, request for proposal. After that, we further shortlisted, and we then came to 3 potential people that should go and do due diligence on the company Telkom Kenya, because you needed to be very strict with your standards so you don't have all sorts of charlatans coming to disturb management while they're running the telephone company. So we then had this bidders conference. I think it was on the 6th of December in 2000. I had invited the 3 companies. I was working as a vice president then. I'd flown into London that morning with my associate, a young man, from Greece, called Miltos. So he's white, I'm Nigerian. And we then had all these bidders. If I recall, there was Telkom Malaysia, there was Orascom Telecom, and then there was a group called Mount Kenya Communications. So we had people from around the world, the Malaysians, a couple of Malaysians came in with their team. They had some local Kenyans working with them. Orascom Telecom, some Egyptians came in. They had some people from Kenya, across Africa, working with them. And then Mount Kenya Communications Consortium was actually being promoted by a chap that Nigerians got to know the next year. But his name is Strive Masiwa. He's the one that brought Econet to Nigeria. So Mount Kenya, started by Strive, Econet Wireless, and they had hired the international consulting arm of the Dutch telephone company called KPN. So a team from KPN International Consultancy, headed by a certain Yvonne Tevierik.
We're very conveniently present.
Were present.
Yes.
And so in this big boardroom, there were 24 men and only 1 woman. It was Yvonne. And of course, most men tend to wear dark suits and a white shirt, and she happened to be wearing an orange skirt suit and orange shoes and a nice bag to match. So she stood out, and she has blonde hair, green eyes, so you couldn't look across the room without stopping for a moment. And that's how we met. But obviously at that time, I was selling and she was buying, and obviously it would be a conflict of interest to obviously have anything more than a business relationship. So we kept it platonic. The deal went for several months, and ultimately the Kenyan government, actually Mount Kenya was qualified as a preferred bidder, but the Kenyan government refused to sell and said we're going to shut down the transaction. And so we went our different ways. Then, because Yvonne's unit in KPN is involved in international telephone consultancy, she was contacted by the unit of that Bode Akindele set up, Investors International London Limited, when they were looking at NITEL, Nigerian Telecommunications, in 2001, a year after. And so she then began to provide them telecom advisory. But then she noted I didn't have any investment banking advisory. And she said, look, you needed an investment banker because I can give you all the telecom advisory, but someone needs to put it together in a financial model, run the numbers and do a discounted valuation and give you the number on how much you need to bid.
I know someone.
Yes, I know someone. I said, he's in London. And then she came to London, I think July, August of 2001, and mentioned the deal to me. I said, oh, yes, I'd be interested. And that's how I got involved in the NITEL transaction. And ultimately, we worked together with IILL. And now we are working on the same side of the deal. There was no conflict of interest. Relationship blossomed. And they say the rest is history.
The rest is history.
So we're blessed with 3 girls. Well, they're not girls, they're young women now. You know, Zara is 22 this year. Wow. Oh, it's already 22. Sorry, Ngozi is 20, and Anouk is 15. So they're all over the world.
What a lovely story!
Yeah.
Amazing.
Thank you.
So, Ike, you've had quite an interesting journey. So, what next for Afrinvest? Where do you see the company, say, in 5 years?
In 5 years' time, Afrinvest will be one of the biggest financial institutions in Nigeria. I say that not without having the structure in place. If you asked me 10 years ago whether that would have been possible, I would say no. But today, with the convergence of finance and technology, the line is already blurred between what is a big commercial bank and what is a small microfinance bank, you see, because technology has allowed a bank like Kuda, which has a unit microfinance license. Unit means you have one location in some remote part of Nigeria, but because you're connected to the central bank window, you can spend the advertising dollars and bring in the customers. With technology, they can seamlessly use their bank account anywhere in Nigeria. That's good on one hand, probably is worth far more than some of the regional banks or even some of the medium-sized commercial banks that have a requirement to put up 200 billion naira in capital. So that convergence is already happening. You already have seen some of the bigger banks now trying to come back down to build fintech platforms. But it's difficult to change an old
model.
Yeah, model. So we are set in that journey. About 3 years ago, we launched our first fintech business, Optimus by Afrinvest. Today, it has about 250,000 customers quietly, and it's just an investment and savings app. We've also recently acquired a microfinance bank. So we're in a business of tooling that license to fit with the fintech business. And in the next few months, we'll be launching that. And once it's out there, we want to take the niche as one of perhaps the leading bank that can offer you outstanding investments and savings while able to do all your banking business as normal. And I think that would be something that will appeal to Nigerians.
Absolutely. And I completely agree. How very visionary, yet immediately practical.
Yes.
Ike Chioke, it has been an immense pleasure.
Thank you, Toast.
Thank you very, very much
Thank you for having me.
joining us on One2One.
Excellent.
Thank you.